Ellie, incredible you can be here today with us. Thank you. Thank you.
Thanks for having me.
Yeah. So I wanted to get into this here with with THYP. That was obviously the first US ETF and that kind of ETP for Hype. And I guess what drew 21Shares to Hyperliquid and kind of made it worth productivizing for institutions to actually understand it?
Yeah, it's a great question. So we've paid attention to Hyperliquid for the last couple of years. We're a global asset manager managing about $5 billion in assets since 2018. So we've been through multiple cycles and launching world first ETPs, especially in Europe and then eventually in the US. So we launched the world first Hyperliquid exchange traded product in Europe last year, almost a year ago exactly now. So we already knew that Hyperliquid is a financial market story, and we really want to passport that exciting story to the US investors that we actually pay attention to. So that's why we actually launched the world first Hyperliquid ETF in the US.
Wicked, wicked. Now, when it first came out, like THYP secured a bigger share of the underlying assets market cap than any other digital asset at launch. So was that just because it was a smaller market cap, or do we think that there was something bigger and broader about Hyperliquid that was quite interesting to investors?
I think it's a mix of both, but I would say that Hyperliquid as a product, despite the fact that this is not available to trade in the US for US persons, has fascinated a lot of investors here to be able to have exposure to that exciting story. The reason is because they were able to understand the pre-market IPOs for Cerebras or even SpaceX and the others. So they understood that there is a thing here that is really interesting. But to me, what caught the minds of investors earlier this year was the silver trade earlier in January, and eventually the gold trade, right? After the war between Iran and Ukraine and the US, that really pushed, especially the oil markets to an all-time high, right? So this is when we've seen that Hyperliquid was a necessity and a platform to enable investors to have exposure to this asset class after market close, especially when geopolitical conflicts were getting heightened on the Fridays all the time. So that's why for us, we've seen that Hyperliquid has become the equivalent of Google for financial markets, especially after market close, over the weekend, 24/7. And that's how we like to call that story. And that caught the attention of investors to be able to allocate very quickly.
Yeah, and it's a common thread that I'm seeing throughout today here is that institutions really noticed the 24/7 markets for commodities and other equities, and then the pre-IPO markets. So it's great to see to just continue to get that vote of confidence from you as well here
Absolutely.
on that. So you guys also have a 2x leverage product for Hype, and are you guys drawing in a different kind of investor with that, or is that like a different investor from the staking product per se?
It is. I agree. Couldn't agree more. This is a different kind of investment. I would say this is less of a longer-term investment when it comes to the 2x Hyperliquid ETF. When it comes to our staking Hyperliquid ETF, we're looking at investors retaining the asset for at least for now the last 3 months, and they're planning to do that for the next few years as well. So this is a high-growth venture type of investment that they're looking at. So I would say one is more tactical, while the other is really strategic for a portfolio allocation strategy.
Got it. Got it. With 21Shares kind of perspective on Hyperliquid, what like towards the fundamentals of Hyperliquid, like,
Right.
what is that versus the token reflexivity, and how you guys think about that?
So I think they are intertwined, and the reason is because Hyperliquid could not be the story that it is today without the phenomenal builder ecosystem that they built for the last 12 months. That's one thing. And the second thing is that they have a high-performing blockchain with already an application that enables investors to have access to all these financial assets 24/7, even after market close. And that translates into high revenue, and most importantly, then token reflexivity with the burn and the token buybacks. So that's why for us, this creates a flywheel for both the application, the blockchains, plus the tokens that really help the investors to understand that if they hold a token, they also have exposure to the platform, the ecosystem builders, and at the same time as well benefiting from the token buybacks, which is similar to a share buyback for any equities.
Got it. And from direct hype exposure from an ETF or an ETP, versus kind of these, equity proxy products, like even a DAT or something? How should investors approach that in your guys' eyes?
These are, different kind of, I would say, product structures, similar to all of these Bitcoin DATs as well as Bitcoin ETFs. Investors always try to understand what do you have exposure to. So the first one for the Bitcoin ETFs or the Hyperliquid ETF is about having exposure to the daily performance of these assets, where the underlying is 100% backed by third-party custodians. And we at 21Shares, we've done exactly that for the last 8 years. But then for the DATs, this is more of a leverage bet on both equity plus also the underlying asset performance. And that does not give an investor the same exposure. But they understand that really well. And that's why we've seen the die down in volumes and investments into these DATs compared to the ETFs, especially in Europe. We've seen over $2 billion in investments year to date for the investments into, for example, the Bitcoin ETFs, right? So I do think that investors understand that simplicity is key when it comes to having exposure to this asset class, but it's also depending on their risk profile and their investor type as well.
Wonderful. All right. I really appreciate your insight on all this. Thank you. Hyperliquid.
Thanks for having me.